Ever wondered how a private company goes public? How it transforms from a firm known only to a select few to one that stands under the spotlight on a bustling stock exchange? Well, sit back and buckle up as we delve into the intricate world of initial public offerings, or IPOs. Imagine a company that has grown significantly over the years, and now it's time to take the next big leap. The company decides to go public. This move involves selling a part of the business to the public, allowing everyday investors to own a slice of the pie. But how does this happen? It's through a process known as an IPO. The first step in this thrilling journey is hiring underwriters. These are typically investment banks that are entrusted with the responsibility of managing the IPO. They're the backstage crew that set the stage for the company's debut. They help determine the offering price, decide on the number of shares to be offered, and take the lead in marketing the IPO to potential investors. But with great power comes great responsibility. The company must comply with the rigorous regulatory requirements set by the Securities Exchange Commission in the country where they plan to list their shares. This step calls for the submission of financial statements, business plans, and other crucial disclosures for review. It's like an open book exam, where the company needs to lay all its cards on the table. Next, we have the filing of the prospectus. This is a document that offers a deep dive into the company's operations. It covers everything from financial details to risks, painting a comprehensive picture of the company for potential investors. It's like a biography, telling the company's story, its triumphs and trials, to help investors make informed decisions. Then comes the roadshow. It's not a literal show on the road, but a series of presentations and meetings where the company and its underwriters generate interest in the IPO. They meet with institutional investors, analysts, and potential buyers, pitching the company's story and its potential for growth. The next step is pricing and allocation. Based on the demand generated during the roadshow, the underwriters determine the final IPO price. The shares are then allocated to institutional and retail investors. It's like a grand auction, where the highest bidders get the first dibs. Finally, the moment of truth arrives. The company's shares are listed on a stock exchange for public trading. Investors can then buy and sell these shares on the secondary market. It's the grand finale, where the company steps into the limelight and becomes a publicly traded entity. So, why do companies go through this complex process? An IPO can provide a company with the capital it needs to grow, increase its visibility and credibility, and offer early investors and founders a chance to sell some of their shares. For investors, it's an opportunity to invest in a company in its early stages and potentially benefit from its growth. However, like all investments, IPOs come with their own set of risks. It's crucial for investors to conduct thorough research and consider all available information before investing. After all, knowledge is power, and in the world of IPOs, it's the key to unlocking potential success. So there you have it, the exciting journey of an IPO, from backstage preparations to the grand public debut. It's a thrilling ride that transforms private companies into public entities, opening up new avenues for growth and investment.